Hello there, my friends. Chris Marcus here with you for Arcadia Economics on December 31st, 2018. So I want to wish everybody a happy new year. And just to get you prepped, especially for all the precious metals investors and people who are following the market, have two great guests on the show today to talk about some of the things that have been happening in the market. We have Mickey Fulp, the Mercenary Geologist, and Jordan Roy-Byrne of TheDailyGold. And we're going to talk some gold and silver, see what the outlook for next year is. So welcome, gentlemen. How are you guys doing today?
Doing well.
I'm
Back
great.
in the sun out of gray Vancouver, so I'm happy.
And that is Mickey Fulp. And Jordan, how are you today, my friend?
I'm great. Thanks for having us, Chris. Mickey, it's great to hear your voice again. I'm looking forward to the interview.
Yeah, well, I think we're going to have some fun here. And to kick it off, Jordan, I know you just posted a video with some of your thoughts on the gold and silver market, and you were touching on the Federal Reserve being a key driver, which obviously it often is in these cases. Curious to start off, maybe Jordan, you can take this first, but what are you expecting out of the Fed, and how will that impact the precious metals markets going forward?
Well, it's a good question, and I'm not really sure what I personally am expecting out of the Fed, because I think what the Fed's future course will be based on the stock market, because the stock market is a leading indicator for the economy and, of course, financial conditions. And precious metals have rebounded nicely recently because the market was expecting 2 or 3 hikes next year, or 3 hikes, I should say. And now the market is basically expecting there's only a 50% chance of the Fed doing only 1 hike next year. So going from hiking several times to almost a near pause, that supports precious metals. Because looking back over the last 65 years, I've looked at 13 times the Fed has gone from hiking rates to cutting rates, and 11 of those 13 times it's produced almost an immediate rally at worst, or an immediate new bull market or continuation for gold stocks. I use gold stocks because they have a longer history than gold. So in most case, in the context that we have, I believe it's going to work out again, that we'll see a new bull market in precious metals when the Fed basically cuts rates. So I don't think we're quite there yet. We need to get from this point, from where the market is expecting a pause, or half expecting maybe one more hike. We need to get from that point to the point where the Fed is done and they're looking to start cutting rates. When we make that transition, I think that's when you'll see precious metals go into a bull market. And so it's hard to predict when that's going to happen. So a lot of that will revolve around the stock market, because stock market weakness will induce easier policy from the Fed. And so we've had this near 20% decline in the S&P, of course. It got very oversold. It's rebounding now. And so with that 20% decline, we're not, we've seen gold stocks are up around their moving average resistance. Gold's rallied a little bit above the 200-day moving average. So we're not, I don't think we're quite there yet. I think we need to see another round of weakness. And if that happens, the Fed will definitely stop hiking rates. And I think they'll look to cut. So really, to me, the things to watch regarding the Fed next year will really be the stock market and how that performs. And if you look at ratios, if you look at gold stocks and gold divided by the S&P 500, they're now outperforming the stock market. Those ratios, they've risen above the 200-day moving average. And over the next several months, if we do get some stabilization or rebound in the stock market, I want to see how will precious metals perform in that kind of environment. Are they going to digest these recent gains and kind of hold up well, or are we going to see a lot of capital flow out of precious metals and into stocks again? So I know that was a long answer, but that really covers as 2019 starts. I think those are the things that I'm going to be watching. For cues on the Fed, it's really going to revolve around where the stock market is going.
Well, I think you had a lot of good points in there, Jordan, and certainly as rates go up, the pressure on the stock market's going to build, and certainly would lead to higher probability of them reversing course. Mickey, your take on that? You seeing the same thing there?
Yeah, I don't think I would disagree with any of Jordan's takes, except I think we're a ways from cutting rates. You know, the Fed a couple of months ago was set on 3 rate increases in 2019. They backed off of that significantly. I think that's due to a couple of things. Number one, Trump beating on Powell all the time had something to do with it. And it certainly has not done the markets well, the U.S. major markets. But I would probably argue that the U.S. major markets took this downturn because they were front ran by the rest of the world. You look at the rest of the world, and markets worldwide turned around at the beginning of 2018. The emerging market index started going down, has been down time and time all year long. Shanghai index is down something 25% this year. So in my opinion, the recent correction in U.S. major markets was just following the rest of the world. Certainly when the major markets are not doing well, people start talking about recession, but I think we're a long way from recession in the U.S. Number one, GDP growth 3.5%. We never saw that high during the 8 years of the Obama administration. Unemployment record low levels, number of jobs record high levels. So for the Fed to start cutting rates, I think we need to be on the verge of recession, and I don't see that yet. That does not mean that I'm not bullish on gold, and I am extremely bullish on gold right now because we are in the season when gold nearly always goes up. If you look at trading days over the last 18 years, 20 years, gold goes up from the 1st of November to the end of February. That's a seasonal trend. We've seen that this year right now with gold at 1281 as we speak. It's something on the order of a 6% gain since the 1st of February. We will expect that to continue through certainly January and perhaps into February. That's the way that gold trades. The safe haven demand for gold has certainly been increased, and that's always a driver. And with U.S. markets taking this dip, that means there's more safe haven demand. And the old saying, when the U.S. sneezes, the rest of the world catches cold. And I think that's happening right now. For those reasons, I'm bullish on gold, at least in the short term.
Yeah, and certainly the Federal Reserve sneezing quite forcefully these days. Again, I like that you both mentioned the rate cuts. And I've been wondering if we will ever see that second rate cut anytime next year, because again, even if there's one more, you would think there's a lot of pressure on the stock market. And obviously we've seen how the Fed responds. So I'm curious, especially if the stock market does continue to be volatile and decline, if people are selling stocks, that means they're selling it and they end up with cash. And given that the majority of the stock market, even with the decline, still near its high, whereas precious metals on the lower end of their range, do you see, if the stock selling continues, that some of that money starts getting reallocated into precious metals, especially if we do get that pause or even rate cuts next year?
Yeah, I would definitely see that happening. And the reason is because if you put it all together, the looser Fed expectations or softer Fed expectations, those came about amidst the sell-off that we've seen in the stock market, and precious metals benefited from that. And if you look at the ratio charts, you can see that gold and gold stocks, as I said, they're outperforming the stock market. And so to me, the real question for 2019 is what we've seen the last 3 months, is that just a flash in the pan for precious metals, or is it going to be the start of a new regime? And I think that depends on Fed policy. As I said, I do agree with Mickey. I'm not expecting rate cuts anytime soon, but the market right now they're only saying, based on what Fed funds futures, I should say, they're only showing a 50% chance of one more rate hike in 2019, and they're even starting to price in half of a cut in 2020. So it's not, the potential for a rate cut is not that far off. And if we do see another leg lower in the stock market, I think that could get people talking about a rate cut possibly at the end of 2019. And I mean, I'm not predicting that and saying that's going to happen. I'm just saying, if the stock market weakens to that point where the market is kind of talking about, well, they need to think about cutting rates, and this would probably be at the end of 2019 or early 2020, that's the point to me when precious metals would be set up to continue this rebound and make another leg higher. And so that's kind of, I mean, to me, that's the real question. And at least as 2019 starts, I don't, this recent low in the stock market, I think it's going to hold. It might be retested in the next month or so, but I think it's probably going to hold for the time being. So I'm not expecting, I mean, short term, I think, yes, precious metals could probably gain a little bit more here, but I think the stock market is probably setting up for decent performance at the beginning of the year. So that, yeah, that's kind of my thinking for the rest of the year. If the if the stock market can stabilize and rally a little bit and at least go sideways, it's going to be very interesting to see how that impacts precious metals. Again, will precious metals still see some capital inflows, or will they give up most of the gains that they just got? I mean, I obviously don't know, but that's just a question I think will be important for 2019.
Certainly one to keep an eye on. Mickey, your thoughts on that?
Well, I think the difference between what Jordan's talking about, what I'm talking about, is I'm looking much shorter term. So, I don't see a recession in 2019. I think that is what is going to drive the Fed to cut rates. Once again, I'm looking right now till the end of February, short-term rise in gold. So I think that it is likely. We've seen it so far. The other thing we haven't brought up, and I think is one of the major controlling factors, and it makes sense, is the U.S. dollar. If the U.S. dollar remains strong, then gold's not going to go up as fast, no matter what kind of safe haven demand we have or what's going on the macroeconomic. And, gold actually had a good year when it's compared to U.S. dollar. U.S. dollar was up 5% in 2018. Gold, as we speak, at 1281, has lost 1.5% year over year. So in normalized terms, gold is up 3.5% this year. Trump is on record of wanting a weaker U.S. dollar because it obviously keeps our trade deficit and our balance of payments down if we don't have a strong U.S. dollar. So I think that in the near term, say in the next 6 months or so, is going to have a significant impact on the price of gold because gold's priced in U.S. dollars. So DXY, I think you need to watch DXY in that paradigm.
Yeah, Jordan, would love to get your take on that. I know, especially you dig into a lot of the technicals, looking at the chart of the dollar index, which, like Mickey said, up, I guess, probably even a little more than 5% on the year. Although, if we go back to 2017 or late 2016, still a bit lower, where the dollar index was up as high as 102. So, depending on the time frame of when you look at it, it's down from when other points when Trump's been in office, yet certainly has rallied this year. Any thoughts on the correlation between the dollar index and gold, and how you're seeing that from a technical perspective?
Well, I think with the dollar, it's kind of rolled over a little bit, and so what's happened is it basically retraced 62% of that 2017 decline, and so when you get a retracement or a correction, they tend to be 38, 50, or 62%. Those are Fibonacci numbers that technical analysts follow. So it in this decline, it looks like it's going to have a short-term decline. And so the question is this decline going to go a lot lower, or is it going to stop around? You do have a lot of long-term moving average support, I think, in the 93, 94 area. So that's what I'm going to be watching. Will the dollar, I mean, it looks like it'll probably test that. Is it going to bounce hard from there, or is it going to go lower? The action in gold will tell us a lot. I mean, I'm a believer that gold tends to lead the dollar. And so the question for me is, and stepping back for a second, gold against foreign currencies. And another way to look at that is gold times the dollar. Like if you multiply the two together, that's another way to look at that. And so that chart, if you're looking at it, that closed at, I believe, a 20-month high at the end of last week, or it came within 1 cent of closing within a 20-month high. But if you're looking at it on a weekly or monthly basis, it is closing at a 20-month high. So that's really significant, because before gold begins bull markets, usually what you start to see happen is it strengthens against foreign currencies, it strengthens against the stock market. And so for me, the question now, at least in the short term, because gold it looks like it's getting close to the top, but I don't disagree with what Mickey is saying. And so the question for me is, assuming the dollar is going to drop a couple points here, how much is that going to support gold? Because there's a 1300 to 1310 strong resistance area. If the dollar weakens a little bit more and gold blows through that resistance in the next month or two, then that would be a really good sign that, this could be the start of a bull market. But if we see the dollar drop and gold kind of struggles and it doesn't rise as much as it should, then that would at least be kind of negative and would tell us, this rally is, probably going to peter out here as we get towards the end of winter. So it's very interesting with the dollar. I guess that's the question, the short-term weakness that we're seeing in the dollar. How much is that going to support gold? If you're a bull, I mean, like we all are, we want to see gold explode through that 1300 to 1310 resistance area. If it doesn't do that, then that would kind of be disappointing. So with respect to the dollar, I think that's the key to watch here over the next month or so.
I'll chime in on that. So the weakness in the U.S. dollars, perhaps I'm looking at a much shorter term. Dollar was at 97.5 last week. It's at 96.2 this week. So it's been very volatile over the last month or so. And in the meantime, gold just keeps kind of marching higher and higher. So I would argue that the seasonal demand for gold is what's driving this right now. The way things normally happen once again. So bullish on gold from till the end of February. After that, quien sabe.
Now, in terms of silver, do you see any of these dynamics drastically different from gold, or likely to follow the same patterns that you've both been discussing about gold?
Well, yeah, I'll just give a quick answer on that. Yeah, silver's very interesting. It may have put in like this massive long-term double bottom. It's very interesting considering the miners did not, I mean, even though they've been performing terribly, generally speaking, they did not come close to retesting that 2016 low, whereas silver, I think, came, depending if you're looking at a monthly, weekly, or daily, it basically did a double bottom or came very close to that. I think, it's trading in the mid 15s right now. There's a lot of resistance at 16. So I think at worst, we're probably going to see silver test 16. But it's so oversold on a long-term basis that, and I have an analog chart comparing all these long-term multi-year bear markets. And so it's very interesting to me. I mean, silver follows gold, and once gold gets going, silver is like gold on steroids. So it'll be very interesting to me to see if it's going to. And by the way, I should say, at the end of these 3 or 4 historical massive bear markets in silver, in most cases, it usually doubles in a year after those bear markets. So, if silver shoots up above 16 in the next month or two, that could be a sign that, we are beginning a bull market and something really bullish is happening. So yeah, to me, that's what's interesting is it's so oversold. It's really underperformed gold, but you really need gold silver cannot really go into its own bull market without gold doing so. So silver is very interesting. So the question for me is, can it shoot through 16 in the next month or so? Similar to, can gold shoot through 1300 or 1310?
Yeah, it's interesting, especially we've seen the metals up in the last couple of days and silver at about 1550 today. So Mickey, your thoughts, anything drastically different you're expecting with silver or a similar pattern? What are you seeing there?
Yeah, I think I agree. It's been oversold. Needs a gold bull market to go up. It cannot create its own market. The gold-silver ratio is completely out of whack compared to normal times. It's gone from 86.5 2 or 3 weeks ago to 83.5 on Friday. I don't know what it is today. I don't think it's that ratio's moved very much. So that's abnormal. And silver's always more volatile than gold is on both the upside and the downside. Resistance in silver, don't follow it that closely, but $16 makes sense to me, just as I think we're looking at 1300 as major resistance to gold right now. It had resistance at 1265, 1270 last week. It went right through that. But once again, has a lot to do with what happens to the US dollar in the short term.
Yeah, and speaking of the dollar, one more on the fundamental side, but a news story that happened last week. Curious if either of you have an opinion on it. Steve Mnuchin, it was either Sunday night or Monday before Christmas, said he met with all of the banks and confirmed we all have adequate liquidity and everything is good, which struck me as a little odd just in my experience. Usually when you get some of those announcements, often there's something they're not telling you. We've heard rumors of the plunge protection team involved as we had that big rally early in the week last week. Any thoughts about that announcement or whether that's something investors should be keeping an eye on?
Not really. I know there's talk of the plunge protection team, and I don't deny that it's probably existed at some point. But if you look regarding the stock market, there are some indicators that were like at 5-10-year lows, Brett, technical indicators, sentiment indicators. So, to me, I don't think there was any artificial support for the market. It was just extremely oversold. But yeah, those comments were kind of odd. I don't pay much attention to them anyway. I don't know if they really had any impact on the dollar. So that, I don't have for someone who usually rambles on quite a bit, I don't have anything else to say about that.
Yeah, it was just mysterious and bizarre, kind of hard to read. Mickey, any thoughts on that one?
Well, I think the plunge protection team definitely exists, if that was part of your question. But let's also bear in mind that we are now into a 10-year bull market, unprecedented bull market. So it was time, it was past due. We were in quadruple overtime that these markets needed to take a breather, needed to take a correction. Are we at the beginnings of a new bear market? I don't know. We're overdue, but we certainly can make the case that this is a bear market dip in a bull market. Earnings remain strong. Probably the greatest negative right now with the U.S. economy is we don't have qualified people to fill jobs that are available. The one market that has not performed as well as I expected it to is the small caps, the Russell 2000. Usually in the kind of economy that we have, that the small business part of our economy is what front runs everything else. We haven't quite seen that this time, even with the massive tax cuts that Trump brought in on corporations last year. So I think maybe we should, and I'm just thinking and talking right now, we should probably pay a bit more attention to the small business Russell 2000 to get some ideas of where the economy goes going forward.
Yeah, that's a good thought to keep an eye on. And perhaps just in wrapping up, any other forecast or predictions? We're a couple hours away from 2019. So again, I'd like to wish both of you a happy new year. It's been great getting to know both of you better and learning from you and sharing the information. Anything you guys are seeing or expecting for 2019 that you'd like to leave folks with today?
It's a great question. At this point, I really don't know, to be honest. I don't have any predictions. I think it's precious metals. It's really going to depend on what happens with the S&P 500 and if I like Mickey's answer because I don't know either. I think it's really hard to call at this point if we're going into a real bear market. Maybe we will a year from now. But what happens there is really going to impact precious metals. The junior sector that Mickey follows so closely and I do as well. A lot of names there have gotten really, really oversold. So, I think they can potentially bounce for a couple months at least into the start of the year because they've been so extremely oversold. But for the larger parts of the precious metals sector, it's really going to depend on what happens with the stock market.
That makes a lot of sense. And Mickey, any final thoughts looking out for 2019?
I think it's going to be better than 2018. 2018 was pretty horrible for everything that we do, all the way from the major markets to commodities, base metal complex, precious metal complex, oil market devastated, down 25% year over year. So I look forward. It's my best wishes to you and yours for a happy next year, because 2018 certainly was not very good to any of us.
Yeah, well, certainly a good test in patience and a lot of things setting up. I agree with the general themes we're getting at here. We're certainly keeping an eye on the Fed, and I do expect, I would say I'll predict one rate hike next year. Again, I'm not sure that we ever see that second one, and certainly should that manifest, then would be interesting to see how gold and silver will respond. So with that said, I'm going to wish you guys and our audience a happy new year. Again, Jordan Roy-Byrne of The Daily Gold at TheDailyGold.com and Mickey Fulp, the Mercenary Geologist at MercenaryGeologist.com. Gentlemen, thanks again for joining me today. It's great catching up with you, and we'll have to do this again soon in the new year.
Yeah, thanks so much, Chris. Great to talk with you guys.
Thanks a lot, Jordan. Thanks a lot, Chris.
All right, fellas, we'll talk to you again soon.